Right, everyone, let's take a quick look here at two trades I actually made recently and break down what I saw in the market that convinced me to jump in. So starting with the first trade, we are obviously looking at the 1 minute time frame. Now, before I explain my entry here, take a moment if you want to sort of analyze this whole price action. You can even stop the video if needed and see if you can figure out what prompted me to go short around this level up here. Now let's go over my reasoning and hopefully your analysis aligns with mine. As I always stress, guys, in my videos, structure is everything in trading, at least in my book, and I have to say that it's a principle I've refined over time and actually follow religiously at this point. As a result, I've seen solid improvements, I should say, in my ability to consistently spot high quality setups. Looking at the price action on this chart, we first see a downtrend from this reversal point up here. It's not perfectly clean, as you can see, but still somewhat measured. Then price forms a base above the 760 area, followed by a reversal that fuels this uptrending move. Now notice what happens as the market reaches equilibrium around the 824 level. It immediately surges upward with an impulsive demand bar, creating this way the impression of a genuine breakout. At this point, the natural tendency would be to assume the breakout is real and that the market won't look back in the short term. A common reaction here would be obviously to jump in long. And that would be a fair argument if not for two key factors. The first one is this immediate pullback after the breakout move, which partially, in my opinion, invalidates the breakout argument. Factor number two is the market's failure, as you can see from the action, to push higher. Instead, it forms a double, then triple top, which typically, obviously, are a classic bearish reversal signals. And now, this ceiling to floor bouncing type dynamic we have here, particularly this lower high, marked for me the exhaustion of this entire surge, while reconfirming the non-viability, I should say, of the breakout move. As I always mentioned, gang, patience is absolutely essential in trading. And again here, you need to allow structure to fully develop before making any trade decisions, never the other way around. Take this case for example. If I had jumped on this breakout attempt here without taking the time to actually observe how the market would respond to the move, it would have cost me money. It was only after this sideways action had fully played out that I was able to spot a high quality setup forming, but not before. Again, jumping in too soon can lead to you getting screwed because without a clear bigger picture or a well-defined structure, you won't be able to identify anything meaningful on your charts, let alone spotting high quality setups. So this is why it's so important to let the price structure speak for itself. And now turning back to the chart, after spotting the triple top formation, the next key bearish confirmation for me came with a break of structure around the 823 level, which was a move that clearly solidified my bearish bias. With this confluence of signals, I decided obviously to enter short. And as you can see, the trade initially faced some drawdown, but eventually moved in my favor, hitting my first target. However, I made the greedy mistake of aiming for a few extra points with my second target, only to get stopped out. Still, I should say I closed the trade in the money, and that's all that matters. All right, and now that this trade is wrapped up, let's shift our focus to the next one and break it down briefly. So guys, this trade starts, as you can see, with the daily chart where I had been watching for a potential rebound of the 20,000 support level. Now, as the market approached this key psychological level, I immediately switched to the 1 minute time frame to get a more refined, if you will, read on price action. And here you can clearly see price reversing and forming these higher lows. These are then followed by a sharp impulsive move, easily pushing through this mini resistance level, a sign of a genuine reversal, which also indicated that this corrective move had likely come to an end. This bounce also confirmed to me the bottom of the range, which I should say lined up perfectly with my expectation of a move toward these mini range highs. But at this point I wasn't fully sold on the notion, so I didn't jump in. As I was expecting price to pull back to my entry level first, which, as you can see, it did. And sure enough, the bias was spot on. There was some choppiness around the second target, which I initially missed by just a hair. But in the end, the trade still played out, locking in over 100 points. That said, though, looking at the 1-hour chart here, the market ended up pushing some 400 points higher. In hindsight, after nailing the bottom at the 20,000 level, I should have probably held onto a couple of micros to capture more of the move. Anyway, it didn't work out, and that's fine. By the way, guys, if you found these trade breakdowns helpful, don't miss my next video where I'll be discussing similar setups and strategies. Alright, gang, thanks for watching, and as always, hope to catch you all in the next one.